Oh, he is here, baby. He's here and ready to talk about the earnings reports to watch for the week of September 7th. Hope you all have a fantastic Labor Day, obviously, naturally. If you're like me, you'll be working the entire weekend and on Labor Day itself, but you know what? That is perfectly fine. We'll survive. We're going to have a good time. Us, essential workers out here, right? That's funny. Laugh, please, for me. So we'll go right into it. There's a couple, really only two that I'm going to be specifically highlighting this week. Not a massive week. Next week's a little bit larger than this one, but we'll take a look at a couple big ones for me. So obviously you start off Monday before open. It's a Chinese company. It reports earnings. Qdian.com. Not too familiar with this one, all things considered, but obviously it's not Labor Day there, so that's why there's still an earnings report on a holiday, which is weird, but again, Chinese company, so that's why. Tuesday we get into some interesting ones, obviously. We have General Finance before open, Yuxin Group, and NAPCO. Not what I'm really looking for there, but after close we have some exciting ones, right? Obviously you start off with a big name in Slack. Slack, as many of you know, it's probably pretty common. It's a stock I'm not a huge fan of, just due to pricing action, and it's been relatively favorable this year as far as pricing action is concerned. But if you look at these earnings, they're expected a negative 3-cent EPS, which is an improvement from a negative 14 cents a year ago. Pretty nice. Full year, they're expected negative 16 versus negative 28. So there is improvement there. I got to give them credit. And next year, even, closer to profitability. But again, it's still a couple years down the road, which is what I'm not a huge fan of as far as it's concerned. But revenue obviously is the main story here. Expected for the full year to grow 38% and the next year grow 31%. Those are good growth rates. I can't lie to you. Next year should surpass the $1 billion mark, which is obviously a big number. So for the quarter, expected 209. If I had an estimation based off of what other similar companies have been doing, I would estimate that this is actually going to be a beat in terms of the revenue for this company. Profitability, I'm assuming, probably beats on a non-GAAP perspective, but I bet from a GAAP perspective they will not be hitting their goal. But the revenue, again, is a story when you talk about Slack, in my opinion, and I say they're probably going to beat on a revenue perspective, so you could see the stock potentially have some movement upward. But again, it's a tough market right now. The last 2 days, Thursday, Friday, they were tough. So I don't know necessarily if the rebound's going to happen that quick. I don't know. We'll have to see how it goes. But investors have been hammering stocks if they haven't been meeting their 100% goals, right? They've been hammering them. So keep an eye out for that. After them, Lululemon, Athletica. Again, I mention this every week when it comes to clothing. You can't expect too much as far as this is concerned in Lululemon's aspect. Typically, a median for these companies right now, you expect to lose about 40% in terms of revenue if you're a clothing company right now. That's just in the entire industry. That's what we're expecting to see. It's what we're seeing for the most part. So don't be shocked if you see the number. And that's why these clothing stocks are down, upwards of 30% this year for that reason. A big portion of their business is cut, and the demand hasn't quite recovered as high as it is. Companies like Kohl's have seen, good growth because they carry other products besides clothing, but just clothing specific are getting hit very hard. Now, the key, again, as I've mentioned to this, is how they handle the e-commerce game, right? Online sales is really what investors are kind of looking at for these in order to see if they can potentially consider buying in yet or not. So online sales, big when you're looking at Lululemon. There's Koopa. He's the guy you jump on, the turtle you jump on in Mario. He's a cool guy, I guess. There's Health Equity. Casey's General Store, again, always see, ads for these. I have Casey's General Stores in my vicinity. It's not necessarily anything close, but we're talking about an hour, off. So I've heard of these things. but never really known. But I know that they've been putting up good numbers. I can tell you that for sure. If you look at the numbers, they've been putting up good numbers, and if you compare them to like maybe a Dollar General type, you would see that there probably is increased demand for them this quarter. So I'd like to see what those numbers look like, but in my estimation, they'll probably be pretty okay. Definitely a stock to look at. There's ABM, Frisia, Calivo, and Sea Change. Nothing else super massive as far as that's concerned, as far as interesting. Okay, after that, before open Wednesday, there's a little Love Sack action. Love Sack, baby. Baby Love Sack. It's my favorite 80s song. American Eagle after them. I'm going to lump them in, obviously, as you might imagine. I'm going to lump them in with the Lululemon category. It's all about e-commerce at this point, baby. That's what we need. There's HD Supply. Company's been doing pretty good numbers. I covered them last earnings to kind of find out a little bit about the company. And I like what the company has to offer. I'm not a huge fan of the stock as far as pricing is concerned, but earnings reports are big to look at for those because you can see, especially in today's market, right, you can see a lot of price movement from earnings reports. It's pretty massive. You have Mastercraft Boat Holdings Incorporated, Rev, Navistar. Yeah, I don't know on Navistar. It's a weird thing to think about. What kind of benefits do you have in terms of navigation? I mean, I think there's benefits, obviously, from... It's so hard to say. There's less travel, so I don't think there's a benefit. But is there more business travel? It's a hard one to say. It's a tough one, and I can't give you a for sure answer. After then, we have SecureWorks, Astronova, GW Apparel Group, nothing massive again for them. Lump them in, again, with the other clothing companies, and AGTC. Some people are pretty excited about it, AGTC, biopharma, that a lot of people are looking at. Again, I'm not the biopharma guy, so I can't tell you too much about it, besides the fact that it can be pretty volatile, and obviously there's a lot of talk about it. After close, we have Zscaler, as we always see. GameStop, really, at this point, awaiting bankruptcy. I'm so shocked that... I find it surprising that GameStop still even exists as is. But the numbers aren't necessarily horrific, but it's a dying industry. GameStop is a company in a dying industry that likely will not make it past the next 5 years, in my opinion. So I would not be putting any money into GameStop personally. You have RH, Restoration Hardware. You know, nothing crazy. We have May Pharma, Descartes, AV, Big Commerce, Lakeland Industries, Concrete Pumping Holding, and Verint. I don't have any major insights as far as these ones are concerned, so nothing massive that I want to focus on there. Thursday before open, we do have a relatively hype stock in Fuel Cell Energy. It's been, honestly, just a weird thing. Super volatile, obviously, as you can imagine. I shorted this stock towards the end of last year and made a decent chunk of change, a few $100 off of it, just off of a cheap put option. There's substance to the company to an extent, but again, pricing point, I don't like it on that perspective from a stocks perspective. Fuel Cell Energy, you can look at it for maybe price movement off of an earnings report, but definitely not an investment I'm excited about. And Bioceres, Crop Solutions as well. After close, we do have a pretty interesting IPO, obviously, in Peloton. I don't like the company right now, again, obviously, because lack of profitability. I don't like the stock price either, because it's an overvalued stock, in my opinion, for what they offer. But again, I do think that there are benefits in the current marketplace for them. And a lot of it stems really from I would say on average, and I haven't had empirical data necessarily to back it up, but I do believe that quarantining has led people to do a lot of home gym. And no doubt with gyms being closed and still some gyms closing down again in some states, Peloton likely benefits from the home gym aspect. Now, these are very expensive machines, and I do need to mention that. They're very expensive machines, and I don't anticipate them doing super well in recession environments like we're facing. So without stimulus spending, I do think Peloton probably benefited a lot from stimulus spending. I'm not going to lie. This quarter should be good. But we're not likely to get another stimulus package, and after that, I could see the stock falling down. But I think those are going to be good earnings for Peloton. That's my perspective on the matter. Chewy.com also reports. Chewy is my other focus stock because really just the sheer potential of this company is pretty massive. Expected a negative 16 cents EPS line versus a negative 21 last year. It's not a good number. Not a good EPS number. I can't lie to you. But there is improvement. I do want to say that. Negative 47 versus negative 63 expected this year. So negative 47 is expected this year versus negative 63 last year. There's an improvement there. I can't lie to you. But revenue, again, is my focus for this company. Expected for the full year to grow 40%, and this quarter expected to grow 45% in terms of revenue over year. And I think there's a lot of that benefit really because of the environment. Some stores, Pet Essentials, maybe people don't want to go there and they want to go to a really contact-free environment, and that is Chewy. It's so convenient. This is a very convenient service, and if you own pets, you know it is. Somewhat a little bit more expensive to an extent to buy stuff on there, but it's about convenience. So this is getting your pet stuff delivered to you every month. You can set up for an every month delivery of the same exact pet meds, pet supplies, whatever you might need every single month. You can set delivery times. It's incredible and incredibly convenient. So I think they benefit a lot, and trust me, there's been a lot of unexpected additions to families, as in pets, as in also babies. But pets, people are adopting pets a lot. There's a lot of people getting new pets right now because they were stuck at home and lonely. So Chewy.com, expect some good numbers here. A revenue beat, baby, 50% plus growth. Oracle, Dave & Buster's, obviously expect horrific numbers from Dave & Buster's, no doubt about that. Zumiez, all obviously clothing company, mix those in. Electronics, Farmer Brothers, Farmer Brothers, what can I say? These are just two brothers that are just doing the farming, They sell corn. I don't know Farmer Brothers. Come on now, get out of here. Lightpath, Net1, and A-Mark, Precious Metals. And Friday we have Kroger. I think Kroger puts up good numbers again. Pandemic quarter for them. I think Kroger's going to put up some banger numbers. Demand slowing down, so who knows what the stock price does, obviously. But demand in retail is slowing down to an extent. But Kroger should be a good quarter for Kroger. That's all I got for you today, baby. Hope you had a good one.